New Gold has released their fourth quarter results, and well, they failed to hit guidance, even after cutting the initial guidance they had issued for 2024, at least on a production basis, that is. But they made up for it by beating cost guidance, so it's a bit of a mixed bag of results. All right, folks, we're talking New Gold, we're talking Q4 earnings. Let's dive in. From a financial perspective, New Gold separated themselves from the other producers to issue earnings this week by actually demonstrating improved economics with a strong gold environment. The company in the fourth quarter reported revenue of $262 million, which was a 32% increase on a year-over-year basis from the $199 million in revenue reported in the fourth quarter of 2023. Of course, this was the result of elevated gold prices, with the average realized price jumping 33% on a year-over-year basis, going from $2,000 an ounce to $2,667 an ounce. After recording a reduction in both operating expenses and depreciation versus the fourth quarter of 2023, net earnings came in at $55 million, or 7 cents per share, versus a loss of $27 million, or 4 cents a share in the year-ago period. Adjusted earnings improved to $59 million, or 7 cents a share, as compared to a loss of $4.7 million, or 1 cent per share in Q4 of 2023. Cash generated from operations improved from $71 million to $110 million for the quarter, while free cash flow improved from $700,000 to $22 million. For the full year, revenue improved less dramatically, climbing from $787 million in 2023 to $925 million in 2024, an 18% improvement, with the average realized price of gold increasing from $1,944 to $2,413 an ounce. Net earnings for the period totaled $103 million, or 14 cents per share, versus a loss of $65 million, or 9 cents per share in 2023. Adjusted net earnings improved from $48 million, or 7 cents per share, to $153 million, or 20 cents per share. Improved metals pricing led to cash generated from operations growing to $393 million, from $288 million last year. However, the big improvement was in free cash flow, which jumped over 400%, going from $17 million to $85 million. New Gold finished the year with cash and cash equivalents of $105 million, which comes after making a $50 million repayment on its outstanding credit facility, bringing that facility to a balance of $0. Despite the vastly improved financial results for both the quarter and the fiscal year, New Gold actually failed to meet their production guidance. The fourth quarter saw New Gold produce 80,000 ounces of gold and 14.5 million pounds of copper, versus production last year of 79,000 ounces of gold and 12 million pounds of copper. Cash cost per gold ounce sold on a byproduct basis declined substantially on a year-over-year basis in the fourth quarter, dropping from $994 an ounce to $728, a 27% improvement, while all-in sustaining costs improved from $1,481 an ounce to $1,018 an ounce, a 31% improvement. For the full fiscal year, however, gold production declined, with gold production falling from 321,000 ounces to 298. This was partially offset by an improvement in copper production, which climbed from 47 million pounds to 54 million pounds. And in terms of guidance, the company had originally called for gold production between 310 and 350,000 ounces, which was later reduced to a range of 300 to 310,000 ounces, guidance which was still missed. Copper guidance, meanwhile, called for 50 to 60 million pounds of copper production. New Gold did better from a cost perspective, however, with cash cost per gold ounce sold on a byproduct basis dropping from $891 an ounce to $769 an ounce on a full year basis, meeting guidance that called for a range between $725 to $825 an ounce. And on an all-in sustaining cost basis, New Gold improved from $1,434 an ounce in 2023 to $1,239 an ounce for all of 2024, beating the low end of guidance that sat at the $1,240 an ounce range. Total capital expenditures also came in below guidance at $271 million, versus a guidance range of $290 to $330 million, which was attributed to sustaining capital coming in at just $88 million versus guidance of $115 million on the low end. On an asset-by-asset basis, Rainy River in 2024 produced 226,000 ounces of gold versus guidance of 250 to 280,000 ounces, while New Afton produced 73,000 ounces of gold, beating the upper end of guidance that sat at 70,000 ounces for the year. Looking towards 2025, New Gold has reduced their guidance for 2025 from what was originally provided in their 3-year outlook last year. While gold production was originally expected to be in the range of 360 to 410,000 ounces, that figure has now been reduced to a range of 325 to 365,000 ounces. The impact here is largely from Rainy River, where the guidance range has dropped from a midpoint of 315,000 ounces to a midpoint of 280. New Afton's midpoint comparatively has dropped from 70,000 ounces to 65. In terms of copper, guidance here has reduced marginally and sits at a range of 50 to 60 million pounds for 2025. Cost guidance was a mixed bag, with the cash cost midpoint dropping from $700 to $650 an ounce, while the midpoint for all-in sustaining costs per ounce increased from $10.25 an ounce to $10.75 an ounce. In terms of capital expenditures, total capital guidance has jumped substantially, going from a midpoint of $205 million to a midpoint of $292 million. The bulk of the increase here was attributed to growth capital. All right, so let's wrap it up. New Gold's fourth quarter results can be best described as a mixed bag. Production was down, but so was costing, while net earnings were up, which is a great picture of a mixed bag earnings. Quite frankly, the results were saved by the massive jump in the price of gold, but when compared against peers, that's basically what happened to many others in this earnings cycle. Guys, you know that I'm a fan of New Gold. I think that in the long run, this company is going to do quite well, and it's a company that I think we're going to maintain coverage on moving forward. All right, everybody, thanks for watching. If there are other companies you want us to cover in this earnings cycle, please let us know in the comment section. I promise we're looking at them when you guys are letting us know that. We appreciate every comment we get, and we're going to keep bringing it for you guys all earnings season. Thanks for watching, everybody.